The European Central Bank held borrowing costs at a record high as expected on Thursday, but it did signal it may soon cut interest rates. The ECB has kept rates steady since September, but has long signalled that cuts were coming into view. ECB President Christine Lagarde.
The incoming information has broadly confirmed our previous assessment of the medium-term inflation outlook. Inflation has continued to fall, led by lower food and goods price inflation.
It further said wage growth was moderating and firms are absorbing more of the labour cost rises through profit margins. But the ECB added domestic price pressures are strong and keeping services price inflation high. The biggest complication could be if the US Federal Reserve delays its own policy easing after hotter than forecast inflation data. The world's biggest central bank generally sets the tone for global financial markets, but economists said even that would only slow and not stop the ECB.
I have said in the past that we are data dependent. We are not Fed dependent. That was not the Fed, that was CPI numbers. And obviously, anything that happens matters to us and will in due course be embedded in the projection that will be prepared and released in June.
The currency bloc is now in its sixth straight quarter of economic stagnation and the labour market is starting to soften. ECB policymakers have long pointed to a June rate cut. Markets have priced in 75 basis points of cuts this year, or 2 moves beyond June.